Thanks for clicking! All eyes were on Stats Canada this morning as it was set to release its final inflation read for 2023, with the majority of the big banks predicting that inflation would come in at 2.9, down from October's 3.1. We got our answer at 8:30 this morning when headline inflation came in unchanged at 3.1%, 0.2% higher than that which was expected. Core inflation, which, as we'll see, is what the bank looks to when deciding on interest rates, remained unchanged as well.
Yeah, you know what I mean?
Indeed, given all of the hype surrounding the Federal Reserve announcement that it planned on cutting interest rates by 75 basis points next year, despite rushing to walk back expectations over the past few days, we are hearing a lot from the usual suspects parodying the CREA and Sean Cathcart that we could be seeing rate cuts coming in as early as January.
My daddy wouldn't tell me anything that wasn't so.
Yeah, and the data comes as the news is reporting on a year-end interview with Bank of Canada Governor Tiff Macklem, where the governor noted that he does expect interest rates to come down at some point in 2024. So what I want to do today is go over Canada's CPI data for the month of November and look at some year-to-date data, take a look at the Bank of Canada Governor's interview with Bloomberg, and then discuss what to look for next. Speaking of next, I am going to be releasing a year-end video looking at some of the dynamics in the US and how those dynamics are likely to affect the Canadian economy in 2024. Click like and subscribe if you want to get those updates, but for now, let's get into this data. Onto the data. As mentioned, Canada's inflation rate came in at 3.1%, unchanged from October, and down 0.2% than that which was being expected by the banks. Food price growth slowed, though still sitting at 4.7%, the fifth consecutive month that we've seen disinflation in food. Further downward pressure was put on the inflation rate by decreases in the price of cellular services and fuel oil. With that said, mortgage interest costs were up almost 30%, and rent was up almost 7.5%. Or, as Bloomberg put it,
think about it, folks. We've seen higher borrowing costs because of higher interest rates, so that is an inflationary factor. With the inflation rate excluding those costs sitting at 2.2% for the month of November, excluding shelter costs entirely, the figure is 1.9%.
So, if the cost of money was free and was shelter, the Bank of Canada can lower rates.
Do I still get paid?
So, Canada's CPI basically unchanged in November with food price growth slowing and shelter cost, mortgage interest cost, and rent pushing up the CPI basket. But how much have prices risen year to date? When the Bank of Canada goes to make its spring real estate decision in April, what is it going to see year over year when it looks at February's inflation data, released in March? Looking ahead, prices are up 2.78% since February of 2023. So if we get no more increases in our prices from now until April, when the Bank of Canada is set to make its spring interest rate announcement in time for the spring real estate market, if prices remain the same, we don't see any more inflation, then the inflation rate will be below 3% in time for that announcement. But the real numbers, the real important numbers, come when we look at measures of core inflation, the measures the Bank of Canada looks to when it's deciding whether or not to raise interest rates, and the measures that strip out more volatile items like food and gas, which remained unchanged, with CPI median sitting at 3.4 and CPI trim remaining at 3.5. Again, looking ahead at the inflation data that the bank will be seeing when it makes its April announcement, that's a 2.55 increase in CPI median since February and a 2.64 in CPI trim. So again, similar to headline, if we get no more increases in our inflation data over the next 3 months, CPI core will be sitting in and around 2.5 when the Bank of Canada makes its rate decision.
There's 100% certainty.
And despite all of the recent calls that we've been seeing, especially in the past week coming from the Globe and Mail, that the central banks just changed the inflation target over that of 2%, it's not clear that the Bank of Canada is going to agree. If this data is still sitting over 2%, maybe over 3% by the time they make their April decision, it's not clear that the Bank of Canada lowers rates in time for the spring market. Given that, as we'll see in a minute, Bank of Canada Governor Tiff Macklem has stressed time and again that he wants to see continued and downward pressure put on the CPI, this morning's flat read in the CPI is going to leave the door open for the bank to keep rates higher for longer. But that's not to say that we're not going to see interest rate cuts moving into 2024. with even Governor Macklem during his interview with Bloomberg saying that he does think rates will come down sometime in next year. The governor stressed again, as I'm sure he understands it bears repeating, that the bank remains data dependent and that the bank wants to see several months of sustained downward momentum in core inflation before cutting rates. And if it wasn't abundantly clear for those in the back, the governor doubled down, noting that doesn't mean 1 or 2 months, but a number of months of continued downward pressure in core CPI.
So you're telling me there's a chance?
And while we had been seeing some continued downward momentum put on the core CPI, especially in September and October, today's read appears to break that momentum. As we've seen time and time again on this channel, bringing inflation back down to 2% isn't a straight shot. There are bumps along the way where we can see progress and then inflation bumps back up, or flatlines and then bumps back up again. So we have headline inflation remaining unchanged at 3.1, despite all the predictions that we'd see it come in at 2.9, and we have core inflation seemingly breaking its downward momentum, flatlining remaining unchanged from last month. And this surprise read coming out of the inflation data should leave the Bank of Canada some more room to keep rates higher for longer, to delay cutting interest rates, especially with the Fed already planning to cut. Given today's surprise, as we've learned time and time again, when someone tells you they know for sure that inflation is coming down and that interest rates are going to follow, find yourself a different realtor. Whether or not the downward momentum in Canada's inflation data has stalled remains to be seen, but we'll have a much better idea when we get December's inflation read on January 16th, and we'll obviously have an update out on that read on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.